What's up, my traders? Are you ready for the big event today? FOMC decision is coming in exactly 3 hours, and let's see how markets are trading and what can we expect. Okay, last couple of hours we see one optimism in dollar pairs and some USD selling across the board. Here we see Euro USD that decisively we can see broke above yesterday high. This is 4 hours chart, so we have had already one big candle up, and currently Euro is testing pretty strong resistance areas. We can see that it's defined by those lines. It doesn't matter how those lines were produced, but as we see and we are gonna see, they are gonna provide one good resistance area and possible, I'm pretty sure, but okay, you can never be sure in trading, reversal area for Euro USD. Why do I say that? Can Euro move more up? Of course it can, but in trading we have to do with probabilities. Okay, also we see the prevailing trend is down. We see this impulsive big move down from 106 to 109.50, and currently we just see one correction. For example, we see those moves are not even impulsive, just one. Okay, we can say A, B and C wave. C waves are always very tricky, but this C wave is not even impulsive, it's just churning, trading. Okay, now except the last two candles, there is nothing to add. And keep in mind what I have said in the past in some of my videos on Twitter feed, that market makers always like to clear the books before big events and decisions that will create volatility, and usually they do it where the pain trade that moment is. So yes, we might see one exaggeration to take some stops, especially now that we are at the closing of the European session. So when the decision come out, we can see bigger volatility. Okay, let's see also cable is a little bit more volatile as usual. It also break above the 126.80 high. This was May high. For example, in Euro we see that we are almost 3 figures away, one and a half figure away. Okay, this we can also see this in the bearish of Euro GBP. It's normal. Anyway, I would like to take any profits here in cable. It's very tricky and risky to open fresh longs here ahead of the event. Regardless of what Fed will do, always take prevail. And of course now there are a lot of support zones to the downside. I don't think it was to mention. You just take this, take profit from GBP, from cable longs, and wait. Of course, if you are bullish, you can wait any retrace to add more. If we are bearish like us, you open fresh shorts. Okay, I expect a big move lower to the downside because listen guys, now all the markets are focusing on the Fed, and imagine the Fed pausing and other central banks still keep hiking. This is stupid. Doesn't make any sense because always everybody is looking the Fed from the low, not to say anything else. Okay, because Fed controls the market, like it or not. Every central bank is behind the Fed. No one has the balls to do whatever. Imagine if you remember last year, ECB, the biggest central bank after the Fed, Lagarde said inflation came out of nowhere. It's transitionary and bullshit like that, okay, and delayed the increase in rates with all the negative effects in euro dollar, if you remember. And now, when the Fed already is hiking 10 times, all the central banks just watching and raising. So if you believe that Fed will pause and other central banks will keep hiking, good luck with that. Okay, let's go back to the text now. Of course, we see this. Okay, we broke this big support 103 in euro dollar. That's why we have seen some technical selling. And currently we are trading exactly at the next support area, 10277, 777. And plenty of supports here. Okay, of course it's 30-40 pips lower, but we have FOMC coming, so volatility is gonna be pretty big. Another important thing is that we saw out taking the stops of previous May high just above 68 and 20. It's same situation like AB here, very steep move. I would like to see a reversal lower, take profits in this pair if you are long. USD CAD is getting very interesting because I told you last week we were testing pretty strong support at 133 and below, going down to 132.60 we see here. Okay, I wouldn't go short here. You can wait for any reversal to short higher if you are bearish, but with all the weakness in oil and the beariness in dollar, don't know. It's pretty risky to go short. Of course, you can take your chances, but better cover shorts or open fresh longs. We prefer longs here. Now let's see S&P. It's very interesting because I know everybody is heading this rally, is shorting from 39 handle. We are already more than 10% higher now, and this market doesn't seem to stop. Okay, of course we have Fed event and we're gonna see some volatility, but bears, as I said many times, don't expect big plunges that I read in some tweets and posts about 10, 15, 20% corrections. This is not gonna happen in this inflationary environment. Of course, we can see some short covering now after the event, but especially if Fed pauses, be ready for one huge rally that will happen in stocks. Okay. Imagine we have had so many hikes, rates from zero or negative to almost 5%, and we see this huge move in stocks. You don't have to wonder why. Okay. Now one pretty big support is gonna be 33.20, 23. I mean, if you're gonna try the volatility after the event to open fresh longs. But I reiterate, don't expect big move lower. If we see any dip, it's buying opportunity. Okay, don't miss this advantage again. Same situation in DAX. We see this rising wedge coming. I would like to short Europe because okay, market has optimism right now. But don't forget the war in Russia and Ukraine didn't end. The natural gas problem is not solved. Okay, now it's summer. We have 2-3 months ahead before the problems starting to appear again. But Okay, this is fundamental and longer term. Now we have to wait to see any big break below 15,600, this low, to open or add to fresh shorts. Okay. Now, what is left? Let's see gold. Gold, I remain bullish. You see this chart here, higher highs, higher lows. Of course, it is the best inflation hedge in this crazy inflationary environment. So I would like to buy any dips. Of course, it's gonna be volatility. Let's see some points in gold because I know someone trade. Big support area 1930-35, and resistance 90-85. This $50 range is holding last sessions, but I think today it's gonna break. And the volatility, I suggest I would like to buy any dips towards the lower end of the channel and sell any rallies above. Okay. That's all for now. Okay, let's see something interesting. The US yields doesn't share the same optimism about Fed pausing. We see that it's remaining on the lower end of the range. This is the Treasury, the future, so means price move opposite to the yields. Yields are going are ready to break higher, as we see here, and we see next support is pretty much lower. Okay, keep that in mind as well. Okay, have a nice trading today. We are gonna be here in Twitter feed to comment live. Okay, see you on our next video.